Wonderful good day, ladies and gentlemen. We are still in Toronto. It's our last day here, and now we have the honor and pleasure that we are here at the offices of Cantor Fitzgerald, the top research company out of Toronto. And we have, the pleasure to talk to Rob Chang, the head of Metals and Mining Canada. Rob, thank you very much for taking the time.
Oh, thanks for having me.
Well, how was the PDAC so far?
It's been fantastic. It's a little lighter than it was in previous years. However, we found it very helpful in terms of meeting new and current clients, and things are looking pretty up for the guys we're talking to. So
fantastic. What were your top themes at the PDAC? Some like metals or commodities? What have you featured? Or what do you think could be hot in the next time?
The areas that we think are hot are probably two primary areas: the precious metals, the gold. We think they're coming back a little bit, and of course, the story that we've been looking at for quite a while is uranium. We think that we're set for a violent price movement higher, and we think it's probably coming in a short to medium term. So
really?
We're very excited to see what comes of it.
Yeah. When you say short to medium term, you mean that could start this year already? We saw uranium, I think it's 38, 50, 75, something like that.
Yeah, it's around 39 and change right now. And we think that the next time it pushes over $40 per pound, it will stay permanently above that. And we're not quite sure exactly when the prices will move up, but we know that they will move up pretty aggressively, primarily because of uncovered requirements. Utilities around the world, on average, have a lot of their nuclear reactor required fuel uncovered, meaning that they don't have it contracted from 2016 onward. And so we think that in the next, call it 6 to 12 months, we're going to see a lot of contracting activity simply because utilities need to. And because of that, there's going to be a lot more demand in the market. And as we've seen from the news that we've seen recently from BHP, Rio Tinto, and now most recently Paladin, there are some supply disruptions. So there's going to be a little less supply in the market right now, and upcoming lots of demand, in our opinion. So we think there's going to be a big movement.
Can you name this a little bit more in figures, supply and demand, maybe, so that our viewers get an idea about when you say disruptions? Do we talk about like 5% is missing or 20% is missing in the market?
Well, in total of the three mines, it's about 11%. If you count Langer Heinrich, Olympic Dam, and Rossing. These are three of the more significant mines globally. And it's not entire production that's shut down, but there are notable amounts that's going to be shut down for various reasons. Some of it is not entirely known. Some of it, there are some estimates as to how much is going to be offline. But by and large, there is going to be an impact. And this is kind of a standard thing that happens in the mining world, in that production every so often gets affected by something. It could be a labor disruption. It could be failures of machinery, which we've seen in several of these instances that I just mentioned. And it happens all the time. And as they happen, as they pile up, they affect supply. And with the backdrop that we know that utilities are going to be buying more, we think that there's going to be a big movement in price soon.
What is the development in nuclear reactors on the world? I think that's still growing, isn't it?
It's still growing.
Besides Germany.
Besides Germany, well, in the U.S. there's been some talk about some shutdowns as well, but then again, they're also still building. So it's not only the negative, it's just that in the press, we see a lot of negative news because that's what's sexy and what sells. China is still leading the way, many reactors being built there. The thing that many people aren't talking about so much, though, is that Russia's still building, India is building, the Middle East is even aggressively building, and that's the home of where there is inexpensive oil. And to have those areas looking into buying into nuclear is really important. They want to diversify their electricity sources, and they want to move away. And if they can get cheap oil and still look into nuclear, that means that other countries that don't have that access should certainly look into it.
Definitely, great. How does Russia affect so fast the market? Because the megaton to megawatt program, I think it ran out, finally really ran out. How is this affecting the market?
Well, it's effectively removed 20 million pounds annually from the market.
Wow. And what is the yearly production?
Well, it wasn't really production, but it was just approximately about 20 million pounds. Oh, totally?
Total, I mean,
Global production's around 140 or so. 140 million pounds. So 20 million pounds on top of that have disappeared, and it hasn't been replaced. Cigar Lake, the mine that Cameco is bringing on, when it's fully up and running, is going to be about 18 million pounds, and that's earmarked to fulfill most of the vacuum, let's say, that's been disappeared from there. And our estimates for demand, just to give you the other side of the picture, is around 175, 180 million for this year. So there is always going to be a gap. It partially was being made up by this megatons to megawatts, but that's gone. There is, of course, excess supply in the market because of what happened to Fukushima, and that's been covering the difference. But at some point, this inventory is going to run out. And we need more mines to turn on in order to make supply meet demand. And that's what we're seeing. And we're actually seeing by 2020 that no matter what happens, we're going to have an unavoidable supply deficit simply because we don't have enough mines. And we still have reactors being built by the aforementioned Chinese, the Russians, and other countries.
Okay.
So we're going to see a big price movement because of this, because there isn't going to be enough to go around.
Yeah. And I think also let's move a little bit more on the exploration side. I think in the last years there has not really a lot been, besides the big shot of Fission. With the 105 million pounds, which is unbelievable. I've been there actually last year, and I know you are covering them. Maybe you can put some words on them?
Sure, yeah, we're very excited about Fission, and you're right. There have been very few notable exploration of size. Actually, if you think about it, it really is just Fission. You can say Denison, but Denison has been around. The new story that has significant size, of course, 105 million, which surprised everyone, was Fission, and it's a fantastic story. It's a near-surface, high-grade deposit. It is run by a very good management team that recently, last year, won the Prospector of the Year at the PDAC.
Yeah, Ross McElroy.
Yes, exactly, and it's the highest honor you can bestow upon an exploration team, and it's still extremely undervalued. At 105 million pounds, it's trading at around $4 and change per pound. If you look at its peers, when you look at the peers on the Athabasca side, it's probably around 6. That should be on a trading level.
That's a 50%.
It's 50% upside just on trading level. And then if you start thinking about takeout optionality, which is what everyone expects will eventually happen, for someone to buy a product, a deposit of that quality, you're looking at least $8 a pound, if not 10, and that's about where the last transaction happened.
$10 per pound.
Yeah, $10 per pound. And that's
so
what happened.
Maybe talk over $1 billion.
Easily,
yeah,
easily if it goes to that high, right? And it doesn't even need to be that high because the deposit's also going to be growing. It's not staying at 105. This is the first of many increases, I believe. And for those who follow the space, they also know that resource estimates generally tend to be on the conservative side. So if the conservative number is 105 to start, who knows how big it's going to be. So you're going to have a growing base. You're going to have a multiple somewhere between, let's say, 6 to 10 for a takeout multiple. Then now you're looking at significant upside for Fission. So it's severely undervalued, in my opinion.
As you are covering the stock, and you are one of the absolutely top analysts here in Canada, what is your price target by now for the company? What could you imagine, if you are allowed to say that?
Yeah, well, it's right now our target price is around $1.90. But we also provide, although it isn't our official target, an estimate of where the takeout numbers could be. And our estimates is somewhere in the high 2s, close to $3 a pound right now.
Okay.
So numbers always change. However, and of course, that's already based on just 105 million pounds. And as I said, this is growing. So we can see significant upside from here.
Fantastic. So that's almost a double from here if a takeout would be, let's say, around the corner.
Exactly. More than a double, in my opinion. Or eventually, I think, once the resource size grows.
Great. Rob, thank you very much for that.
Thank you.
And all the best. And we look forward to have you soon again here online at Commodity TV.
Look forward to it. Thank you.
Thank you. Ladies and gentlemen, that was Rob Chang, the head of Metals and Mining Canada from Cantor Fitzgerald. Well, you heard it. Uranium is hot. Gold and silver is coming back. And especially he likes Fission as we do, of course. And with almost a double from here in a possible takeout, I think that's a nice price target for such a quality company. And as he said, they are adding to the resource. It's getting interesting. Keep posted and check out the company. Thanks and bye-bye from Toronto.